Looking at Starbucks here, and we have the weekly chart. First thing that sticks out to us is obviously this ascending channel that we were in ever since last May. Obviously pulled back out of that finally. So the 200 SMA in here did not hold that we were up against yesterday's close, but after market we had that big drop, right? So that's why you have this big red candle in here. So where does that currently place us? We ended the day today at 88.26. Huge drop, obviously, with the tariffs and things like that after market yesterday. And then today, the market didn't really do a whole lot, little pops here and there, but nothing that's significant, right? So there's still a lot of volatility basically everywhere across the market. A lot of volume kicked in today, a lot of volatility. So, and we really didn't move. So that's going to be interesting to see when and how vicious our next pop is going to be across the board. But anyway, back to Starbucks here on the weekly chart. We ended the day at 88.26. That currently puts us in between this 86 and this $90 level. Let's just call them whole numbers, 86 and 90, just to make it even. It's really 86.50 if you're going to get technical with it. But we're kind of trading in this channel here, and we have right around a $2 expected move by the end of tomorrow's expiration. And we're currently trading at 88. So 90 and 86 would put us basically either of these 2 points could hit tomorrow. Now, this rectangle here that is being highlighted as I put my cursor across it, that's going to be your April 17th expiration, and everybody is pricing around right a $6 move. So in here, you basically the 94s are in play by the 17th, and you go all the way down here, the $82 level is in play. Now, if we do not hold these 86 levels right here on this weekly chart, then definitely the 82s will be in play. And if not, it's really going to be the 81 level. That's where your support is down here. Because there's really nothing. If you go all the way back into April and May of last year, you have a little bit of something right here, kind of at the 84s, but not really anything of significance. So if we're below 86, then 82 is definitely on deck, and that's going to put us right at our expected move for the next few weeks or so. The next month, you're looking at right around a $9 expected move. You go all the way out to June expiration, right around a $10 expected move in here. So about 98, or you can go down to 78 within the next 43 days or so. And that's what, I'm sorry, the next 78 days. And that's basically what everybody is pricing in. You could end up here or down here. But either way, what we're looking at now, 86 and 90, that's our immediate levels. Above 90, it's going to be this 200 SMA wherever it does seem to come back down to. But if not, if we do not reach that, we're going to reach this upper trend line here. This is now going to be our new safety line, our old support. It's now going to become our new resistance. So we're going to see if we're going to respect that as we're heading back up here to that $100 level. But really, the 200 is going to be something that we have to worry about first as we're going up. That is, if we can pass the 90s and hold, then we have to worry about the 200 first. But if that 200 does not come before the trend line, then it's going to be that the lower trend line here on our chart. If we go into the daily chart here, we'll work our way back down. You can see obviously oversold. That's going to happen. Big red candle day on a gap down. Yep, that's going to happen too. And more volume. Yep, that's exactly what everybody's expecting across the board. And you can see that we're trading in between that 90 and that 86 level here on the daily chart. And you can see the shaded areas, how big they are compared to where we closed at today. So pretty decent moves that everybody's kind of pricing in. IV ranking here through the roof at 127. That's going to happen on big gap down. So just be aware, we do have a gap here that we have to worry about on the daily. Our 9-day EMA is up here. Our 200 SMA is up here. They're finally coming back to where they were. They kind of ran away from each other. You can see how far away this 9-day EMA was from this 200 here. And you can see that we're right on this trend line and finally broke down below it. And now our 9-day EMAs are coming back together here. So that is what we're looking for here. We can go into the 30-minute chart, see exactly what happened today, and basically a whole lot of nothing. Just like we mentioned earlier, huge gap down after pre-market yesterday, and then today just kind of go down and then just kind of hang out down here. So 30-minute, we need to break this 9-day EMA before we work our way back up. And then we got to worry about that $90 level. So $2 expected move by tomorrow's expiration, like we mentioned before. So that 86 and that $90 level are both on the table. So we'll see what happens in here, see if we can get a nice little pop tomorrow, get some volatility sucked back out of this, get the options a little cheap, and then hopefully we can play this to either side, depending on which way the chart tells us that we can play it. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.